The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the podcast on December the 24th, 2020. Happy Christmas Eve to you. Hope you're well. Hope your year's been good in the markets. It's been a really bizarre year, but some parts of the market have rallied, and we're seeing a good rally today across stocks due to the impending Brexit deal. It may be done by the time you listen to this, but on today's podcast, Richard Hullihen, Chief Executive Officer of Polarean Imaging, discusses the FDA acceptance of their filing of a new drug application. Also on the podcast, John Meyer, mining analyst and partner at SP Angel, talks about BlueJay, Scotgold, Bluerock Diamonds and Versarien. And Glen Goodman, former ITV News Business correspondent, now the author of The Crypto Trader, covers this week's Bitcoin, blockchain and cryptocurrency news. And as always, at the end of the podcast, I'll be covering the top 5, in fact, I'll go for the top 10. Top 10 most followed companies on Vox Markets in the last 24 hours. And don't forget, you can check out our COVID-19 index right there on the front page. In fact, biggest rise of the day is Your Gene Health at 5% to 15.5, and biggest fall of Frontier IP down 5.2% to 63.5. Check that out at voxmarkets.co.uk.
Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more. Find out more at voxmarkets.co.uk/app.
And joining me on the podcast right now is Richard Hullihen, Chief Executive Officer of Polarean. That's POLX. Richard, thanks for joining me.
Good to be with you, Justin, as always.
Yeah, now yesterday you got FDA acceptance for the filing of a new drug application, which is very impressive, and we'll dig into that. But as always, Richard, there are always people listening to the podcast, especially around Christmas, actually. There are lots of new people. So if they're not familiar, can you just explain what you do at Polarean, please?
Yes, happy to do that. So our kind of reason for being is the drug-device combination that we have, which hyperpolarizes the inert noble gas xenon-129, making it an imaging agent in functional magnetic resonance imaging, which we then apply to the assessment of pulmonary function in a dramatic, new, and otherwise unobtainable way.
Yeah, excellent stuff. And so the FDA acceptance, can you explain why is this significant? And, what were the other options here that could have happened?
Yeah, so the FDA can essentially do three things with any submission, Justin. The first thing they can do is take a look at what's been submitted, deem that it is not worthy of review, and simply reject it without comment. So that's kind of the worst case. The second thing that they can do is kind of go through the submission at a very high level, assess that it is not worthy of review, but with work might possibly make the bar for getting in. And so they'll reject a submission with a list of requirements for what you would have to do to meet the minimum requirements of having it accepted for review, so they can do that. Or the third thing they can do is accept it. So in our case, they've accepted our submission, which was the outcome that we had planned and worked for.
Yeah. And so they're 12 months now. So what do they do in that 12 months? What are they looking at?
Yeah, so if you just kind of rewind to first principles here, the FDA's charter is assessing the safety and efficacy of things. So in our case, that would be reviewing the content of our phase 3 clinical trial, which was the head-to-head equivalence trial versus xenon-133 for the assessment of ventilation in the two indications, and they'll be going through that with a fine-tooth comb. I think the good news for us in review is that reviewing the data from an equivalence trial is a fairly straightforward statistical activity. And we already know what the answer is. The analysis has been done. It was done at the conclusion of the trial. So we're looking for that process to go pretty straightforwardly through to a conclusion. The efficacy side is a little harder, and anybody who's been watching regulatory behavior for any period of time in the field would know that many submissions might have passed for efficacy but fail in safety, right? Many things along the roadway that fall in that category. And of course, for us, I think the beauty of our submission is our drug is an inert noble gas. And particularly in medical imaging, where most contrast agents are actually IV injected chemistry contrast agents, we have the benefit of our pharmacokinetic kind of pathway being you breathe the gas in, you breathe it out. It's not metabolized, and most of the exit paths for the other agents in medical imaging involve the kidneys and the liver and those kinds of things. There's a fairly kind of well-known behavior for some of those things which are difficult on kidney function for elderly and pediatric patients. The FDA studies those things quite intensely. But here we are with an inert noble gas whose behavior is quite well understood by them already prior to our submission even. So we like the situation for our review. A head-to-head trial, statistical analysis, and an inert noble gas as our drug. That should work. Yeah.
So essentially, is it safe? Does it work? And you're quite confident it's safe. It works. So how you must be quite confident on. Obviously, you can never tell, but how confident are you on getting the approval then?
Well, I think anybody who lives in this market predicts the behavior of regulators at their peril. So I'm not in the business of speculating on the outcome of the FDA's analysis, but I can say that we have had a really solid set of consulting specialists working with us on this. We've done everything from a process point of view that someone should do, including pre-meetings with the FDA, our pre-NDA filing meeting with the FDA, squaring everything up prior to the submission. It is a head-to-head trial. It is an inert noble gas. So I think an outside observer would say this looks like a pretty good setup for a normal review leading to a normal approval. But we'll see. The devil is in the details, as they say. There's all kinds of ways that people have lines of curiosity or interest in the submission, and we will deal with all of those.
Yeah. And finally, I mean, the share price took a bit of a knock. It's come back. People have bought the dip because they see that it isn't a big deal, I suppose. But how significant was it that you didn't get the priority review you asked for? And does that affect anything apart from time?
Yeah, no, it doesn't really. I think if you look at, if we just took a step back and reviewed this a bit, so our normal time frame would have been, and the normal time frame for any drug would have been 10 months for their review. In our case, though, remember that we're also requesting the Hatch-Waxman protection, which adds 60 days to the review period. So it would have been 10 plus 2 or 12 all in for the review. If we had gotten priority review, that would have cut the review period to 6, but would have not altered the Hatch-Waxman assessment. So it would have been 8 or 8 versus 12. So essentially a fiscal quarter, which is not, I think, material to the kind of long-term success of the business. It just would have been nicer to be sooner rather than later. And to be honest, we'd like to be out there helping doctors and patients as soon as we possibly can, having nothing to do with the business model per se. But it didn't fall our way this time. Remembering that, given the fact that we were using the head-to-head equivalence trial as our clinical pathway here, technically there is no path for us in the current way that expedited reviews happen at the FDA. We simply don't qualify for any of the 6 kind of emergency use or accelerated review categories because we chose the head-to-head trial. So it was kind of a bit of out of bounds to have requested, but we had good advice that there was no downside to that, and so we did, particularly under the circumstances of the pandemic and the ability to help clinicians with post-COVID patients, as you saw in the BBC article that was published. But it didn't fall our way this time, and sometimes those things happen.
Yeah, so it's basically a technicality. And just to explain to people, the Hatch-Waxman is an exclusivity period, isn't it?
Yes. So in the U.S., there is a regulatory grant of market exclusivity under what's called Hatch-Waxman. So that's kind of different than the intellectual property kind of pathway for erecting barriers to entry from a competitive point of view. But I think the FDA and the legislative process in the U.S. has always wanted to incentivize the development of new diagnostics and therapeutics, and so this legislation was created specifically to incentivize people bringing novel new products into medicine for the benefit of patients and doctors.
Yeah, absolutely. And you say in the RNS there, the company plans to make full use of this time with regards to commercialization and launch preparation. So what kind of stuff will you be doing? What kind of news will we be seeing, do you think, Urshid?
Sure. So on the interim period of the submission to market launch, there is a large set of activities that have to happen, particularly in the U.S. healthcare delivery system, having to do with establishing all of the coding, coverage, and payment schemes for the commercialization of the drug. So it's a fairly complex environment. There are a lot of very detailed activities that have to take place, a lot of research and use of healthcare economic data in approaching payers and in approaching clinical providers to make sure that everybody is set up and ready and familiar when we get there, and that we're not starting the development of those things post-approval. Yeah. So all of that work, all of those I's have to be dotted, all those T's have to be crossed. There's primary research that happens with clinicians in all of the different disciplines of this, and radiology and pulmonary medicine. So quite a bit of work to do there, and we're off doing it. Part of our last raise allowed us to get started with that. We've actually also added some staff to the business who specialize in the field, and that's been great for us in terms of, replacing perceptions and experience with facts and data. And of course, all of those things change over time. It's a very dynamic landscape out there. Things are changing as we speak with respect to a lot of these things. So very happy to be kind of upgrading our knowledge base and assembling the talent to take this to market. Our model, if you recall our story, is we're taking this to market ourselves directly, particularly in the early stages of this. You want to directly control the messages and pricing and presentations to the KOLs and high end of academic medicine in the U.S. And so building that team, getting everybody educated and ready to go is what we're full on right now.
Yeah. What I find quite peculiar is there's an irony here, isn't it, where sadly, COVID has made your market bigger, probably because of long COVID, and that's why you decided to go for the priority review, because you thought there's greater need for that. But then the share price took a knock on the fact that they didn't get it. So it's really odd, really.
Well, I think everybody views this from the angle that they're most familiar with. Well, the thing that COVID has done is move pulmonary medicine kind of front and center in everyone's mind. It's also, in a very terrible way, highlighted how awful the tool set is that clinicians have presently to try to get their arms around the assessment of pulmonary function, the assessment of therapeutic regimes, what is happening exactly to patients, particularly these strange situations where the patients who were never hospitalized, patients who self-medicated with over-the-counter drugs at home were never hospitalized, then find themselves with these long-term debilitating secondary effects in their kind of ability to do work, their ability to move around, and the healthcare system is struggling to help them. So that's what we do. We assess pulmonary function. You saw the BBC piece; it laid it out in living color in black and white text. It doesn't get any clearer. So I think the long haul patient side of this simply becomes a market segment in pulmonary medicine, the same as asthma, COPD, emphysema, cystic fibrosis, and all of the interstitial lung diseases. This kind of virus seems to have the worst of several kind of combinations of these effects, but they will, I think, healthcare will not unravel this problem without new tools, and so we're in a hurry to get there so we can help.
Yeah, absolutely. Well, I'm going to ask you for the three reasons, of course, and because from an investor point of view, I think, very rarely we've seen in the last sort of 6 months the share price dip majorly. I mean, in fact, it's come back already, having dipped earlier on when RNS first came out, it dipped, but now people are buying it up. But for people who may see this dip as an opportunity, but maybe, just sitting on the sidelines, give them three quick reasons, Richard, why they should hit that follow button on your page on Vox Markets and add Polarean to their watch list, please.
I will, Justin, thanks. So I think number one is it's a disruptive platform technology which stands the opportunity to completely reorganize the assessment of pulmonary function in medicine, bringing it into the 21st century as MR and CT previously had done. The second thing is that the technology is significantly de-risked now. We're into submission at the FDA. And finally, the company has an excellent veteran team in the domain, including 2 strategic investors. So I think we really have a great set of people to take this technology to market.
Good stuff. Richard, thanks very much. Have a happy Christmas, and we'll catch up in the new year.
Yeah, you too, Justin. See ya.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is a special edition. It's a very festive Christmas Eve edition, and someone looks very much like Father Christmas when he's dressed up as Father Christmas is John Meyer, mining analyst and partner at SP Angel. Right, John?
Yes, thank you. I'm not sure I look like Father Christmas.
What are you going to be doing for tomorrow then? What's the big thing in the Meyer household? What do you get up to on a Christmas day, or this year anyway? Because it's a bit different for everyone, isn't it? Really.
Well, judging by the rain we've got at the moment, we're probably putting out sandbags.
Yeah, I know. It's not very festive, this weather, is it? Horrible weather. It's cold and wet. Not very nice at all, but so sandbags all around, lovely. Very festive. So let's have a prediction then, John. Right, before we get into some individual news on companies, let's assume, and I said this to my previous guest on the podcast today, Monday or Tuesday, they're reckoning that the big vaccine, the one that can be widely distributed because it doesn't need, minus 70, is the AstraZeneca Oxford vaccine, will be approved on Monday, Tuesday. That's what the Telegraph is saying from Whitehall sources. That's a game changer because they can then up the dosage to 1 million doses a week. And so that means that vulnerable people, NHS workers, care workers will be done, vaccinated within 8 to 10 weeks. And so, of course, we can unlock the economy because that's why it's locked down, to protect the NHS. So, and you imagine if that's going to be around the world, being vaccinated lots of people, millions of people, then what, on the strength of the economy getting back to normal, what do you think in the commodity plays are the ones that are going to rally? What will do well from that, do you think?
Well, given that the governments are printing money hand over fist, and at some point that money printing has to be reconciled with how do they deal with that? My personal view is they're just going to have to print the cash and suffer the inflation, because if you start to tax everybody with much higher tax rates, you're going to kill the economic growth that you're trying to create with the money spending. So there's no point killing the growth unless if you create so much growth that you can pull all that back in tax. That's fantastic. But I think in reality they just have to accept the fact that money has to be printed here, and there has to be some inflation as a result. And the beneficiaries of that are, well, clearly the commodities that have to be used for the stimulus projects, and we're seeing a lot of that in China. China is importing record tonnages of copper and vanadium and various other commodities. We can see that there's this huge transition from combustion engines to electric vehicles, and that really is gathering pace. And we saw last week Chinese producers hiking prices for the critical electric vehicle commodities. We're talking lithium, graphite, the various chemicals relating to nickel and manganese and cobalt as well. So we can see that what the Europeans have been worried about, that the raw material price rises, is starting to come through, and the Chinese, I think, are going to lead that ahead. Although it's interesting to note that of the four largest battery producers in the world for electric vehicles, only one is currently Chinese. The biggest one, which is Korean, is suffering a few problems. This is LG Chem, because of batteries catching fire. But I suspect that's because they just haven't been making the batteries well enough. And personally, for me, I would just hold off a little while, because there's so much technological advance coming through in terms of material quality and battery quality that I think there's going to be a huge improvement in the charging times and the mileage you get out of these batteries, which is important as a consumer. But let's face it, the world is changing, and the world is changing very fast at the moment. And that really is helpful for a lot of the mining companies.
Mm-hmm. Yeah. Do you know what I've noticed? Even recently, and we've talked about it for ages about batteries, tech, and all this stuff. But even recently, the noise on electric and batteries ramping up, and you've even got people like Apple now, which have always talked about it for a while about getting autonomous vehicles, but now they're talking about battery tech as well. They put a line in the sand of production for vehicles for 2024, and they got special battery tech. But it's ramping up, isn't it, massively? And have you seen Bill Gates backed a company called QuantumScape, which is solid-state batteries? Now, I've invested in a solid-state battery over here. Now, QuantumScape, the valuation is bonkers. It's basically 40 billion. That's how much it's worth. And it's not even got any revenues, pre-revenue. And so over here, we've got exactly the same. And the CEO of Ilika, which is a solid-state battery play over here, exactly the same tech pretty much, very similar. And he said on the thing that they're not more advanced than us at all. And that's valued at less than 200 million and 40 billion in the US for QuantumScape. It's just the hype around these companies. And of course, Tesla is the poster child. But it's I don't see heat cooling off either, because with every country in the world pretty much stopping the sale of diesel and petrol cars by 2030, it's going to be a lot of demand on everything in an electric vehicle, isn't it?
Well, there are a lot of different battery technologies out there at the moment. QuantumScape is clearly very interesting with a solid-state battery. In theory, a solid-state battery with no liquid electrolyte should be safer and could give better performance. Yeah. I say that in theory. It's going to take quite a while for them to really prove these batteries and get them into mass production. At the moment, just to clarify, most lithium-ion batteries that are in cars and in torches and mobile phones use a liquid electrolyte. In fact, it's more like a gel. So to you and me, we don't see that as a liquid. We just see a solid battery, but it is known as a liquid electrolyte within that. And that's where some of the problems come in, where you can get gas formation within the battery, particularly if there is a short circuit caused by dendrites growing within the battery, and that short circuit can create heat, and the gas that is then created can explode out of the battery, causing an RC fire. And that's something you really don't want. If you remember, Samsung had a few mobile phones that caught fire.
That's what. Do you know what? I was reading about Ilika, and I've invested in those, and they say in their all their sort of presentations and their financial products. So the advantage of in fact they're located on the road from here where I live in Romsey, but they've got other places as well. But it's a non-flammable, 6 times faster to charge, twice the energy density on a weight basis, 10 times longer storage without loss of charge. That's solid-state batteries advantage over the traditional lithium-ion. So that's the way forward, surely.
Well, yes, we've been working with Oxis Energy that has a lithium-sulfur battery. That's not exactly solid-state, but it's close to it, and they've been working with the MOD, and the first thing the army do when they invest in anything is shoot a bullet through it, and you can actually put a bullet through the battery and it won't catch fire, and it will actually continue to work, which makes it very interesting from their perspective, but also pretty interesting from our perspective. So if you're in a car and you have an accident, you know that you've got batteries that shouldn't catch fire. In fact, these are quite expensive batteries. They're putting them into aircraft. And they're building a factory in Brazil in a Mercedes automotive complex, and hopefully those batteries will go into Mercedes buses, which are widely used for commuting in Brazil. So good luck to Oxus there, and hopefully getting those batteries into those buses in the near future.
Yeah, marvelous stuff. Okay, cool. Let's talk individual companies. What news has been released, John?
Well, news today from Bushveld Minerals. They've signed a contract with an Asian conglomerate. We think this is a large trading Asian business, probably Japanese, although I don't know myself. So this is for 340,000 tons a year of ilmenite material from their Dundas project in Greenland. They recently got a mining license awarded for that, or a conditional mining license, which is very good news. So BlueJay can now press ahead and finance and start construction of the project, and I think that's got great value myself. I'm a shareholder. I love the business. I think Rob McGilvery, who runs the company, is a very good team leader. And yes, I can't encourage investment in this one anymore. It's
well, do your own research, everyone. I know, do your own research. John's got his own money in there, but do your own research. We always say that. We always got to say that, John. Just cover our backs. We do say that anyway. But BlueJay, what's the chart looking like? Let me have a look at it. What's going on there? Is it has it gone up and come down, or is it?
No, it's been building.
Oh no, good. It's good. Good little good little uptrend there. Nice. All the moving averages in the right direction. Maybe a little pullback today. What's that? For close to 5% down. So, but it hasn't had many pullbacks, is it? Since July, pretty much.
It's a well-supported stock. It's got some good institutional backing in there. We look and it's got multilateral support from a fund. There's a Greenland government fund supported by the Danish government. So when you see these multilateral agencies come in, you've got good underlying political support, and you know that the route to financing is likely to be more money from multilateral agencies, more money should be some money from project finance and offtake financing as well, probably from this Asian trading conglomerate. So they won't necessarily come to market for equity for that, but they could do.
Yeah. Cool. Marvellous. Anything else, John, go on there?
Bluerock Diamonds, good progress at the Karavli diamond mines in South Africa. These mines produce very good quality diamonds. I was talking to a former man from De Beers the other day, and the first question was, well, what's the average value per carat? And the average value per carat runs at somewhere between $330 to $440 a carat, sometimes higher. They reported a couple of nice stones earlier this week, 4.8 carats and 5.13 carats. Those are grades. Higher grades than that for the carats. Recovered earlier this week. It was 14.8 and 8.7 carat diamonds. So the values there are much higher than normal. So it's a very good quality product that comes out of these diamond mines. And Bluerock's certainly got lots of value in it. We've been looking at the valuation recently. I won't preempt anything, but let's just say it's substantially undervalued at the current market cap.
Mm-hmm. So, what's your thoughts on diamonds and stuff like that?
Yeah, the market is recovering now. I mean, it had a horrid time through the year, no doubt about that. Like a lot of other businesses, people couldn't get to jewelry shops, but for those people that still want to live with their wives after the lockdown, for those people that perhaps decide to they need to go out and buy diamonds to smooth things over, shall we say, following the difficult year that we've had. I think it's going to be a rerun of what we saw after the global financial crisis, and I think we're going to see that in many other commodities, where diamonds actually did really rather well after that, because some people have to say sorry, and some people have to go out and say they love you in this sort of way.
Yeah. Cool. Anything else happening, John?
There's plenty going on in the world, that's for sure. Iron Ridge appointed a new NED. Scotgold, they're ramping up production at the Canonish mine in Scotland. Market cap's only £56 million. So again, it's for a gold mining business, it's quite good. The stocks are just over £1 a share. We value it at 182. So I think as they ramp up production, I think the valuation should build, and they've got some more exploration going on. So I'm hopeful that they'll find some more gold in the area and be able to look forward to a longer term future. What's
your thoughts on the gold price? Because it's not a bad year. It's a good year, isn't it? It's 2020. So obviously it's one of those there's contrarian plays, isn't it? But so if we get back to normal, what's going to happen to gold?
Well, I don't see us going back to normal. I think that the stimulus programs, or what are they, $13 trillion pledged so far in the last year, are so extraordinarily large. I just can't see that. So there has to be some inflation coming through. We know the Federal Reserve has changed its the way it looks at inflation now in order to allow it to keep interest rates lower for longer. That's very important. I think that means that money's been coming out of bonds and going into equities in recent months, which is probably why we see some of the very high levels in tech stocks. And although we're likely we'll at some point we'll see a pullback in those tech stocks, let's not forget that the Apple, for example, as a company, has built for many years on its valuation, and maybe Tesla will do the same as one of the leading companies in the world going forwards. Not to say that other auto companies won't catch up, but at the end of the day, I think from a gold perspective, one buys the dips in the market. You can easily buy gold ETFs, but I think the real money will be made in the gold mining companies, because they produce exceptional and extraordinary profits going forwards, much higher than people have been forecasting in recent years. And they get the double whammy because in many cases, lower local currencies mean additional profit because your costs go down. So you've got lower costs due to lower oil prices, due to local currencies, and then you've got higher sales coming through in dollar terms because of the high gold price. And let's face it, the US dollar is likely to weaken over the next few years. And again, that will help commodities which are dollar based in general. Justin, I've lost you.
Yeah, sorry, Don. The last thing you said was dollar based in general, and you went quiet.
Yeah, no. So I think that's the message, is that mining stocks are likely to do very well off the back of all this because they benefit from low oil prices, low local currencies, and higher metals prices, and that's a triple whammy all round.
Yeah, cool, marvelous stuff, John. Thanks for that, fella. Anything else before we go, or is it? We're heading towards Christmas, and I've got to get in my sleigh.
Well, something for the Christmas Santa. Versarien, which is producing graphene, has just acquired another business in South Korea. I think it's acquiring it more for the intellectual property as much as anything else, although they do have equipment for producing graphene. So I think graphene is a wonder material. Almost anything you attach graphene to benefits in some way due to electrical or thermal conductivity. Even if you put it into face masks, it becomes it's antiviral, so they're working on that. There was a recent study published in Turkey showing how efficient it was. If you coat surfaces with graphene, not only do they become less mechanically resistant, they become stronger, and they become resistant to viruses. Or shall we say, viruses don't live very long on graphene coated surfaces. So that's fantastic news as well. So I really think,
John, do you know why I know all that? Do you know why I know all that?
How do you know that?
I spoke to Neil on the podcast yesterday. Yeah. But no, it's always good to remind us of that. So, it is a wonder material. We're still in the infancy, I think, of understanding what graphene can do. And of course, one thing I've learned when I've talked to Neil is that these big companies take a while to adopt new tech, and they have to do lots of testing. But the potential is massive, isn't it?
Yes, I think this is really huge. I'm sure they'll make a lot of money off royalty agreements, joint venture agreements, licensing. That's the way it's going to go. We went to visit Versarien as part of our due diligence, and while we were there, a local but very large clothing manufacturer popped in, and clearly keen on discussions on how to put graphene into what's called wearable technology. So clothing that could, shall we say, wick away the sweat when you're on a ski slope whilst keeping you warm, that sort of thing. Also looking for how can you use graphene for electrical conductivity within that clothing. So very interesting technology. The first practical applications are actually for graphene arches that are being made for various London Underground tube lines to improve the communication and for the signalling. So there are some very immediate applications for so say health and safety, and I think this will build out quite fast.
Yeah, marvellous stuff. John, have a happy Christmas, and hopefully we'll be catching up very soon, maybe the new year, but have a nice one.
Look forward to it. Happy Christmas, everyone.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast on Christmas Eve is none other than Father Christmas, Santa. Oh, sorry, it's Glenn. Oh, yeah. Sorry, Ken.
Oh, it's lovely to be here with you today, Justin.
What's wrong, Glenn?
That's
What's
how
wrong
Father
with you?
Christmas
You feeling
talks.
well?
As Father Christmas, he's very posh.
I don't think he sounds like that.
It's
does he?
wonderful
He sounds
to
like
be here with you today,
that's Prince
Justin.
Charles.
Oh, yeah.
The Bitcoin and the crypto. I've been getting investing in that. Lovely. Yes. Cool. All right, Glenn.
Yeah, cool.
Are you doing anything
Cool
special
beans.
for Christmas for tomorrow?
We're what, in tier 4? Yeah.
Oh, yeah. Well,
Pulling out
that's
all the stocks, going ice skating. No,
well, that's something
we're not
special,
doing
isn't it? Being in tier 4. That you're normally not in tier 4. Saying that, most people spend their days, nothing else to do on Christmas. In fact, Christmas is quite boring, isn't it? It's the run up to the thought of it, and that's. Do you know what? Here's an analogy, right?
Yeah.
Generally, when you're investing, and if it's a big milestone coming up, then the stocks rises towards that. I've seen it quite a few times on stocks. In fact, there's a company I own called Polarean, and they put in for phase 3 trials, I think, and everyone sort of knew it was going to pass it because it's a drug device, quite a safe, quite a low risk phase 3 trial, and so the share price just rose and rose and rose towards it. And they got the part. There's always a risk and may not get it, but of course they got it, and the share price just topped off a little bit, then just settled back down. And that happens a lot in stocks, doesn't it? Things rise towards expectation. The journey is where it's at. And that's like Christmas. The thought, my wife for ages, she didn't understand. I kept saying to her, she said, I love Christmas. I said, I don't. I said, you love the thought of Christmas. Christmas actually itself, you sit around and eat a lot, fair enough, but it gets boring after a while. No one goes out. It's like being in tier 4 before we knew we had tier 4. And so Christmas itself is boring. The thought of it, the surrounding, the paraphernalia, the music, the food, it's a power of thought, essentially. It's more powerful.
Well, what you were talking about there with the... It's the reason for the old Wall Street adage, buy the rumour, sell the news.
That's it! That's how I should have ended that analogy there. Thanks, Glenn. I knew you'd be useful somewhere.
Well, you said buy into the expectation. I don't know. You had some long-winded version of that pithy phrase.
Yeah. Well, I didn't want to see I was just carting out an old, tired cliche. But thanks for reminding me I did.
So you just reworded it. So,
Yeah.
But Christmas, I've got kids. So you live through them, don't you, Justin? Because we're old and basically dead inside. So, there's no joy in us. So we have to kind of watch the children's joy and just like suck it up and enjoy it. That's what I'm going to do. That's what I'm planning to do for Christmas, see?
Yeah. Anyway, listen.
There are hundreds of presents. I haven't got any presents, by the way. I'm not going to get any presents. My wife has decided not to get me a present this year. So There you
Yeah,
go.
this. Do you know what?
But you're not interested at all.
No, not at all of that. No.
Okay.
Let's not get on to talk too much stuff. I don't want to. Why do I care about who you're buying presents for?
I don't know.
Surely we should talk about
Christmassy
some. At least mine was related to the stock market in some way. Yours is just about Christmas presents chat. That's different. That's a different podcast, Glenn. Okay, completely different podcast. So anyway, so Bitcoin this year, crypto this year is a good year, isn't it? It's been for everything else.
Great year, mate.
Yeah. So that just says to me, when everyone else is having a horrible year, then the cryptos, as we know, are dark science art in some way. Then they're having a good year. Then it's basically it's backward.
It is actually. It's perverse because Bitcoin has quadrupled in price now since the beginning of the year. Quadrupled, would you believe? But I can't help thinking if it hadn't been for COVID, I'm not sure that would have happened. Because global economies were trundling along at a reasonable clip. The interest rates were, if anything, people thought that maybe they would go up rather than go down, perhaps. And so we were in a situation where the world didn't really need a Bitcoin narrative as such. But then with all the money printing, particularly from the Federal Reserve, and the fears that would stoke inflation and also dilute the dollar so that it would fall in value, which it in fact has done, that narrative caught hold that the dollar was going to be devalued to a point where it was effectively worthless and everybody should put their money into gold and Bitcoin. That's the kind of extreme version of that narrative. But many important Wall Street figures this year, in fact, pretty much all of them, have taken on a sort of milder version of that narrative. And they believe that a portion of your portfolio should be put into Bitcoin as well as a portion into gold. Some of them are saying only 1% of your portfolio. Some of them are saying significantly more than that. But the important thing has been that all these luminaries from the big Wall Street banks and the independent hedge funders and so on, suddenly it's respectable. Suddenly it's mainstream. And so because they've given it the seal of approval, tons of big investors have been pouring their money into particularly the Grayscale Bitcoin Trust, which I believe is growing at about $1 billion a month. In fact, JP Morgan said just yesterday that we should probably watch the inflows into that fund carefully, because once they start to slow down, then that might be an early warning sign that perhaps Bitcoin has hit a temporary peak.
Who was the bank? Was it JP Morgan or Morgan Stanley? One of them who was really negative on Bitcoin, saying it almost called it a scam and a fraud. And then while it was going down, and then now it turns out they're a buyer of it. Who is that?
Yeah, JP Morgan's chief executive, Jamie Dimon, had some very negative things to say about it along those lines about 2 or 3 years ago during the previous boom. And he was about as scathing as you could get. And now, suddenly JP Morgan issuing important notes left, right and center, telling people about, this to do with Bitcoin and that to do with Bitcoin. They're taking it seriously as a proper investment asset now, whereas, 3 years ago, it was a very different story. They saw it as a very bad thing. So things have completely changed this year for the outlook, for the sort of the image of Bitcoin in respectable finance circles. But outside of that, where people on Twitter still talk a load of rubbish, you've got people like Elon Musk getting involved now in Bitcoin.
It's Elon, isn't it?
About it. That's right. I call him.
You call him Elon.
I've now got used to calling him Elon because of you. Elon is that's like an Israeli pronunciation, I think. Elon. I think.
Pretty
Elon.
Elon.
I'm not sure. But anyway, so Elon Musk has been he's been writing about Bitcoin quite a lot and giving the distinct impression that he's really kind of turned on by it, shall we say. He tweeted a picture of a lady, a vintage lady in, shall we say, a very provocative position. And she has the word Bitcoin pasted over her posterior. And then there's a priest who is supposed to represent Elon Musk, and he's desperately praying for the strength to resist the arse, the Bitcoin / lady's arse.
Where is that then? Oh yeah, I see. Me trying to live a normal, productive life. Yeah, there's sort of old style sort of picture.
Me trying to live.
a man in robes, isn't it, really? A religious man. And they got the lady bent over with a skirt riding, or a dress riding up, and across her bare
Right
cheeks
up.
is the signage Bitcoin there. So he's basically tempted, he's saying, is he? By the lady with the Bitcoin on her backside.
Oh, she's terribly tempting. And Elon, he doesn't know if he can resist. But anyway, he's apart from that, he's also tweeted that he basically, there's the guy Michael Saylor, who we've talked about before, the chief executive of MicroStrategy, the company that rather brazenly invested tons of its cash reserves in Bitcoin, so put them all in Bitcoin instead of dollars, and or most of them anyway. He was tweeting about Bitcoin as usual. He's always evangelizing about it, and Elon Musk replied to him. He said, well, Michael Saylor said to him, if you want to do your shareholders a $100 billion favor, convert the Tesla balance sheet from US dollars to Bitcoin. Other firms on the S&P 500 would follow your lead, and in time it would grow to become a $1 trillion favor. And then Elon Musk, rather than poo-pooing him, replied, are such large transactions even possible? And Saylor said, yes, I have purchased over $1.3 billion in Bitcoin in the past months, and would be happy to share my playbook with you offline.
Oh, okay. So sorry, so Elon Musk who's the guy you saying?
Michael Saylor, the chief executive of MicroStrategy, the big software company,
and so he's probably so people are suggesting now that maybe Elon Musk's company. Do you see that tweet as well that Elon Musk was following? Because he said back in 2017 he approached Tim Cook, CEO of Apple, to buy Tesla in the dark days of Tesla when he thought it wasn't going to make it. The company right then was worth 60 billion, still a lot, but it's 10 times worth that now. But now Apple's just revealed they've had a stuttered sort of progress with autonomous vehicles and batteries. They've mentioned they're going to do for a while, but it's been on-off project. And now it looks like they put a line in the sand. 2024 is production date for their first iCar and battery tech, and they could have bought Tesla. Literally there, ready to go for 60 billion, and it's probably going to cost them a lot more than that to get their thing up and running. They shouldn't go into cars, though. Cars are not profitable. It's a big chunk of capital taken up there. Batteries, yeah. In fact, someone when I tweeted that out yesterday or the day before the news of that, someone said, I hope it's better than their batteries and their iPhones. Yeah, because they don't last a day, do they, really? That's like rubbish. So now if you've got to power a car off a battery, obviously it's bigger, but I hope their tech is better. But if their tech is better, why can't the iPhones run for like a week off one charge,
I'm a bit ashamed to say I've never been in a Tesla. But people, have you been in one?
Don't be
ashamed. Have you been in one?
No.
Have you ridden in one? People who've got them and people who've been in them say, "Oh, you wouldn't understand till you've been in one. It's a remarkable experience. It's a special experience." So maybe the likes of Apple and even the traditional car makers are going to lose out to Tesla if it really is such a special drive, as we're told.
Yeah.
Is it though? I mean, what? I don't know.
Do you know by the way, Elon Musk has also tweeted, looking through Twitter here, Bitcoin is almost as BS as fiat money, he said, right?
Yes, yeah, that was
someone below said, this doesn't make sense. There are three types of people in the world. People who are happy they bought Bitcoin, people who wish they'd bought Bitcoin, and people who are waiting for the whole thing to blow up so they can laugh at the first two people. Well, no, if it blows up, the second person who would wish they bought Bitcoin, nothing's going to happen to them because they haven't bought Bitcoin. So that doesn't make, and they've got 9,500 people have liked that. That doesn't make any sense, does it?
I love it when thousands and thousands of people like tweets that are so hastily typed that there are tons of mistakes and they don't really make much sense. People kind of get the vague gist of it, and everybody likes it. But that's interesting because Elon Musk is sort of there accepting the idea that Bitcoin is based on nothing, that its value is, as you've said many times, its value is just kind of unanchored. It's just kind of out there in the ether.
I suppose it's like anything, isn't it?
It can be any price you want. But that's what he's saying, isn't it? It's like that's why he's saying it's almost as much. What did he say? It's almost as much of a
BS is fiat. But
There's
you know
BS
what?
is fiat, yeah, because fiat is also based on nothing. Okay, it's based on a government promise that they will honour your promissory note or whatever. they will, if you hand in your pound to the Bank of England. Well, I mean, it used to be if you handed in your pound, you would get some gold back, but now you don't get anything back anyway. So I mean, so it is kind of unrooted. It's based on nothing.
Well, no, it's not, because do you know what? It's sort of, like I said, it's like anything really. If you put stock valuing it, it's what people are prepared to pay. And the more people are prepared to pay, you find more people want to pay for it, and the more the value goes up. So it's self-fueling. Bitcoin has been around for 10 years. Generally now it's getting more, institutional backing as well. So, of course, the value goes up. All of a sudden, then people want some more of it, and the institutions that didn't get involved in the first bit say, why weren't you, they got all these investors who invested via these investment funds, saying, why haven't you invested in the best performing asset class in the last 10 years, if it is an asset, which is Bitcoin? And now they say, oh yeah, okay, well listen, we'll de-ramp it a bit, and then we'll get into it, and we'll say, oh, it's an amazing asset. I suppose it's like anything, it's like art, isn't it? You see a painting by one person, you think it's a lot of trash, I wouldn't buy that. And you realise someone in an auction would pay 60 million for it, and think, okay, it's worth 60 million then, because that's what it's worth, isn't it? Essentially, at the end of the day,
Yes, absolutely. Yeah, you're right.
Going back to the contrarian thing, what you said. If the world has had a bad time in 2020 because of COVID, and it's taken an entire year, it's taken an entire bloody year. God, what's amazing that? And yet Bitcoin and cryptos have had a good time. Then surely now the vaccines are coming out, and bit by bit, it'll take a couple of months, but we'll get back to the normal, or the new normal. Then surely Bitcoin's rally is over then, and it'll come back to
you
the
would
earth a little
think, but here's the narrative to counter that, which is that as the global economy takes off, it will take central banks by surprise, because as we know, they're incredibly dovish. They love reducing interest rates, they love printing money, and they show no signs of stopping doing that. Therefore, when the global economy takes off, all of that money that's been printed and that's been kind of just lumped into the system and is sitting there not doing very much at the moment, suddenly it will all be used for spending. And remember, they're going to be sending out more stimulus checks probably in America to ordinary people. They'll just be receiving checks for hundreds or thousands of dollars in their homes once again. And all of that money will have to go somewhere. And if the global economy takes off because everybody's got the vaccine and everybody's like, finally we can go on holiday and all the rest of it, then that could be incredibly inflationary. Because what we will have is a huge build-up of demand from consumers, but not a huge build-up of supply, because, of course, so many businesses have either shut down or retrenched, and as a result, there will be a shortage of supply. And as a result of that, you'll get inflation, and it could be high inflation. So that's the narrative that is feeding into next year's Bitcoin price rise, and also price rise for gold as well. That's what people are saying. I'm not entirely convinced that the global economy will suddenly take off in a massive way, but you have to admit that what I've just said, it kind of makes sense as at least a possibility.
Do you remember Vaccine Day?
Yeah.
Do you remember the day Pfizer came out? And we all been talking about testing's here, and all that stuff, testing's here. But a new vaccine, when that comes out, that'll really help the stock markets rally. Well, then Pfizer came out, and all the stocks have been hammered down, but it's the travel stocks and all that stuff. They all rallied, and that was the start of the turning point. Now we have Vaccine Day 2.
Which one's Vaccine Day 2?
Exactly. I'm just going to say Monday or Tuesday of next week, okay? Markets are open. The Oxford AstraZeneca vaccine will be approved in the UK by the Medical and Healthcare Products Regulatory Association, the MHRA, and that is the game changer as far as the economy is concerned, because it doesn't need the cold -70 supply chains that are quite awkward to get this the Pfizer and the Moderna vaccine shipped. It's basically room temperature. We've ordered the UK government 100 million doses, and they can get that out to GPs. Everyone can sort of, I could give that to you. You could give it to me. It's that easy, as long as you work a needle. But I mean, it doesn't need to be stored. It's -70. So they'll be dosing about 1 million people a week. And when you think of it, right, it's 2.5 2.5 million extremely vulnerable. Those are the people, the potential bed blockers for the NHS, and that's why we've locked down the economy, because the NHS can't cope. Once you vaccinate those, and the NHS, and care workers, which is about 5-6 million people, and that'll take about 8-10 weeks, done. We never need to lock the economy down again. So Monday or Tuesday, whenever the MHRA approve the AstraZeneca Oxford vaccine, that'll be it. Bang! But going back to normal. And that will be vaccine day 2. It came once, come a second time, vaccine day 2.
Well, I hope so, because I own a lot of stocks and shares now. And I really don't want that market to crash any moment soon. Though I
mean, a lot
do
of
have
stocks.
a bit of a nasty feeling.
How many stocks do you hold?
Too many now, dozens, literally dozens. It's just got silly.
Why do you own that
out
much?
of control.
I did a thing
because
on
I
this.
keep seeing tasty little shares and just go, oh, that one looks good. Oh, I'll have to have a bit of that. Oh, I'll have to have a bit of that. It's a bit undisciplined of me. I've been like a kick and mix kid.
Let me say one thing. Have you subscribed to my my YouTube channel?
I'm not sure.
Come on, Glenn. What are you doing? Come on, Glenn. Hit that notification bell. Listen, subscribe, hit the notification bell. I did a while back, conviction or diversification, right? And if you want to earn decent money, you should never own more than 10 stocks, ever. You should never. Right. I mean, and in fact, because I did a spreadsheet on it, saying basically, if you expose yourself, listen, if you have one stock, then of course you'll get 100% upside. You know, if it goes does 100%, you get 100%. You get 100% upside. If it drops, if it bombs, crashes, you lose all your money. Then you put that to 2 stocks, of course. And if one bombs, then you lost 50%. And you keep doing that, and you think, how much risk and reward can you take? How much risk can you take? And around about me 5. I wouldn't go as far as 10. I'd say if you're an experienced investor like yourself, Glenn, you probably need about 5, because you do research beforehand, and as long as you put the quality filters in and you look at the risks first, then you don't need more than 5. Because then, at least if one, in fact, I've got a spreadsheet there somewhere, but if one doubles, if one 10 bags, even with 5 stocks, your portfolio value would go up by, I think, 100% or 200%. But if you could do any more than that, even if you've got a 10 bagger, your portfolio value doesn't really improve massively. Now, getting a 10 bagger is very hard. So I want to see, if I get a 10 bagger, I want my portfolio value to at least double, if I'm owning 5 stocks. But you go more than that, it's not going to happen. You're not going to get any money from it. You're not going to get any reward, because there's more risk. But as an experienced investor, you want, you can accept that risk, but you want a bit of reward if one of your stocks do really well.
But here's the thing: this is how you know you're in a bull market, when everything you buy goes up. That's why I keep buying, I've been trying not to for the last couple of weeks buy any more. I've bought 1 or 2 in the past couple of weeks, but most of that buying was done before that. And everything, apart from just 1 or 2, are in profit, because you're in a bull market. Everything just goes up. I mean, I've been mainly buying American shares, so the British stock market, as we know, has been lower performing in for a very long time now. So I've been mainly buying American shares, and they're just going up. So it's hard to resist buying more when you know that they're probably going to go up. But I do know, because I've been in this position so many times, that there will come a day, maybe tomorrow, maybe next week, maybe the week, maybe next month, or even months time, when suddenly it will just collapse, won't it? There'll come a day where the stock market just falls like 3 or 4% all in one go, and I lose tons of that profit. And so it's kind of a game of chicken, really, isn't it?
I don't know. I don't collapse, does it? I don't think it'll collapse.
Well, no, not necessarily collapse. I just mean have a really bad down day, or maybe series of down days. Because this is really frothy. This is like boom time. This is almost like the year 2000, with the .com boom.
I never play the indices, right? So I don't care. I look at individual stocks, and if I still see lots of upside,
when the market goes down, they're all going to
no, they don't. No. You still have winners in the down market. I've had the other day when the FTSE sold off massively. I had 8 stocks, and 5 were up quite nicely, and say 2 were down a little bit. So it depends what you're playing. Which the microcaps stocks are quite insulated. Really?
Yeah, that's true, and I don't own many of those at the moment, so I'm not insulated.
But you've got to have, but you've got to take the precautions of saying, okay, have they got cash first of all? have they, is there milestones ahead of them? There's certain quality filters I always apply them to make sure they're not totally overvalued and they haven't got too big a risk on them, But there we are. Anything else?
What I've done, I would just add that, I've talked about this on the podcast before, that there have been a few times in the past, you will remember, where the market was frothy and I bought put options on the S&P 500, effectively an insurance policy that would mean that if the S&P 500 or the Dow Jones fell, then I would be making money, which would cancel out the losses on shares. So I might do that again. I think that might be a good idea because it's worked out for me. I've done it once a year for approximately once a year for the past few years, and it's worked out well every time.
Yeah, maybe, because sometimes you can get it whipsawed out of a trade, out of an investment. I mean, not a trade. And then it'll whipsaw back up again, and you miss. And so you think, that was a good long-term investment there potentially, but now I've missed that entry point again. But there we are.
Cool. So maybe an insurance policy.
Right, Glenn, I've got to go. I'm going to do some Christmas shopping. All right, because it's Christmas Eve, traditionally when it gets to gone 11 on Christmas Eve, I do some shopping.
And you've got to be delivering all the presents to the children tomorrow morning as well, haven't you? Around the world, you've got so much to do.
Well, just to my kids, really, but but don't tell them that. Right, marvellous.
You're a very special kind of Father Christmas that ignores all the world's children apart from your own. Okay.
Have a nice Christmas, Glenn, and I don't know when we speak next, but when the next time the markets are open, I don't know when that is. I don't know, maybe next week, I don't know. Who knows?
Yeah, you might want to email me about that.
We'll catch up. Cheers, fella, have a nice Christmas, have a happy New Year. If you don't speak before then, if you do, I'll say it again next week. All right, cheers, fella.
Yeah, and you, happy Christmas. Yay.
That was festive. Okay, it's time for the top 5 most followed. In fact, I said top 10. Top 10 most followed companies on Vox Markets in the last 24 hours. No point doing RNSs because there's very few released. But here we go. Top 10. Cairn Energy at 10. Let's have a look. Move it today. It's up 4%. At 9, Active Energy down 11%, 0.8. At 8, Global Petroleum. It's down 3%, 0.8. At 7, I've lost count. It's Tirupati Graphite, and just so that correct the first time. Non-mover. At 6, Alba Minerals, that's up 22% to 0.455. At 5, it's Nakama Group, up 3.9%. I've never heard of that. I'll check that out. Nakama Group. It's NAK is ticker there. At 4, Powers Energy, down just 1% to 6.8. At 3, it's Argo Blockchain. What's the price there? It's had a good rise of late, but 7 to 17.75 pence at the moment, and it's up 0.28%. At 2, Intelligent Ultrasound, non-mover, 13.75. At 1, it's the star of the last 2 days. I hold it. It's one of my EV plays, and I was going to do a video on it. I still will, but the share price has gone bananas. It did 50 or 60% yesterday, and it's up, in fact, 13% today. It was up 23%. But it's just having a little breather, and that's they make solid-state batteries. And as far as electric batteries concerned, solid-state looks like it's the way forward. They charge fast, they hold charge longer, they're not flammable, so it's a good play. But I will be doing a video on that very soon. Thanks for listening, by the way, throughout this year. We'll do a couple more before the new year, but there will be a weekend Christmassy podcast out in a bit. But thanks for listening. Muchos appreciated.
The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.